I am Jenny Horne alongside Alex Coffey, and now we are previewing Hasbro ahead of their report, which is due tomorrow morning before the market opens. So to tell us more on the toy maker and maybe perhaps shed a little bit more color on this company, which I am not a toy fanatic at this point in time, Alex, I'm not a huge expert here, but is George Tsilis, TD Ameritrade Network contributor. So George, we did have some news last week that Hasbro is actually acquiring D&D Beyond, which is a digital tool set for its flagship Dungeons and Dragons for about $146 million. Now, we are also seeing, of course, they have earnings tomorrow. This will not necessarily impact those results, but what's the latest in Hasbro? Has seen some weakness, down about 18% year to date.
Yeah, so a couple things. I don't know anything about toys themselves, but Hasbro's got some of the premier brands that we're familiar with. Transformers is the licensing and toys brand under Hasbro. Nerf, a lot of folks know that particular brand, just to name a couple. But it's really not about traditional toys for Hasbro, Jenny and Alex. It's about what's going on with digital gaming and entertainment. And I think that's the element of the gaming industry and the toy industry that is the most has the most potential for growth. And I think that's where Hasbro is going. But there is some challenges. The traditional toy business has been challenged over the last few years or so. The stock, as you mentioned, year to date is down about 18%, but I think that reflects the upcoming quarter's numbers, because the quarter that they're going to be reporting, which is Q1, they're actually expecting about 64 cents on an adjusted basis, and that's down 37% relative to last year, with sales, their expectations, which are a little bit less than where they were last year, but still growing over the year-to-year basis by about 4.5% on $1.16 billion. So the quarter coming in relative to price is already pretty much baked in the fact that sales and EPS are not growing as fast as they were on the previous quarter basis. But going forward, I think this will be an interesting one from a guidance standpoint, because if you look at the EPS forward estimates for earnings all of 2022, they are expecting about $5.14 a share, but they are also paying about $2.80 in dividends. So that's more than 50% of their earnings is being paid out in dividends. But with the earnings growth for the next 3 quarters, that dividend about $2.80, some may not have a question about whether they can pay that dividend. And I'd also like to see what's going on with digital transformation. They have exceptional assets. We know Hasbro has been around for many years, special brands. They also have a loyal customer base. But that digital transformation, especially when it comes down to esports, gaming, entertainment, media, that's where Wall Street wants to see traditional toy makers move into.
George, it sounds like this is a company that's in the process of making a transition while also trying to, maintain some relevance within its, traditional core business, of course, which is, physical toys, but also acknowledging that that's sort of the market's moving away from that, as you described. So if you're an investor considering investment into something like this, how close are we to seeing this transition take place from your assessment? Is this down the line if you were to expand on this, or is some of this R&D expense already taken place and this digital transformation sort of being rolled out here in real time?
Yeah. So it's going to be an ongoing phenomenon. I mean, Jenny mentioned the acquisition they recently made, but they made it in cash. The company does have quite a bit of operating free cash flow, and that's a good sign. So if you look at it from an income standpoint, I mean, just to give you some numbers, last year's total sales were up about 17% year over year compared to 2021. EPS, or net income, was up 93%, and that's phenomenal relative to sales. That's nearly 4 times sales in terms of growth rate. But as you mentioned, and I think this is the element of why we're seeing some intermittent weakness in the name, it's the capital expenditures as they make this digital transformation movement. The other thing is licensing agreements internationally. These are very costly to develop and, of course, to construct. That's another thing that's encumbering the aspects of the cash flow to either do things like share buybacks or even increase that dividend. And that's because total sales in North America only represent about 60%. So they don't necessarily have a lot of international presence, especially in the digital framework. And I think that's expensive to expand on, and that's why we're seeing some pressure on the shares. But they're down about 19%. And overall, the balance sheet, the forward multiple, all of these things, and even the price to sales ratio less than 2, you just look at the forward multiple less than 20, those are considered where they're at relative to where they have been in the last 5-year average. So it's not outlandishly in valuation. And in fact, one would say perhaps now potentially an opportunity. But again, you have to consider earnings. Anything can happen during earnings, especially with stocks like Hasbro or any stock for that matter, that have been challenged and relatively performing poorly at the very least in the first 3 months of the year. Now, that's part and parcel of the rest of the market, and Hasbro is not immune to that. Discretionary spending might also be a challenge for the company, but this will be an interesting quarter to see if they actually increase their sales and EPS guidance, assuming this quarter, which is actually lower than it has been in the past at that 64 cents. And again, the forward estimates are about $5.14. So if they can move the forward estimates higher and beat the quarterly EPS estimates, that actually might move the stock, but you have to consider it can always move in the opposite direction as well.
Yes, I do feel like the theme for this earnings season, George, is anything could happen. I could not agree with you more, but it sounds like we're seeing some slight optimism out of you. So I will look forward to those numbers from Hasbro tomorrow morning. George Tsilis, thank you as always for joining us.